so in this video, I'm going to be breaking down my approach and my thought process and conviction behind two recent swing trades that we just did as a team. All right, we swung ExxonMobil 60 strike calls, and we swung XLE, which is the energy ETF, 53 strike calls. Okay, and so I'm going to be breaking down my thought process and approach behind that. All right, and so this whole thing starts with looking at /CL, which is light crude oil futures. Okay, futures are very, very important if you don't know that already. All right, so let's look back in here, back in time a little bit. And if we look back here on March 8th, /CL recently hit its largest high in the past year, I believe. Yep, definitely is last year. Okay, and so let's think logically here for a second about oil. Okay, oil is a beat down sector. It's a beat down business. It's a beat down industry because of the coronavirus pandemic. Okay, but Memorial Day weekend. Okay, travel opening up. Headlines hit Memorial Day on Monday, and then of course Tuesday morning as well. That millions of Americans were traveling for the holiday weekend. Okay, that's good news for oil. Okay, likewise, everything opening back up. Cruise lines are opening back up. International flights to different countries. I know Europe is opening back up. Different international airlines are already talking about flights coming back from London to New York and other American cities as well. Okay, so a lot of positive signs are popping up all over the place for these oil names. Okay, and so if we look back here, /CL set a recent yearly high right under $68. Okay, now let's move forward here into more recent time. Look at this trend line I have drawn here, dating back to May 5th. Okay, we have obvious resistance, technical resistance. I'm pretty new to trading the energy market, excuse me. But I know TA rules apply to everything, no matter if it's futures, crypto, options, equity, forex, whatever. TA, price action, all applies the same. Okay, we have a very strong, very clear resistance right here for /CL. But notice what starts to happen. Okay, /CL is holding the daily 55 EMA. Okay, that's step one. Now let's look at the on balance volume or the OBV indicator. Okay, notice how it's beginning to trend back up to the upside. Okay, that means bullish volume, or it's bullish momentum to the upside, or at least bullish volume is in play. Okay, now if you also look at today's volume bar, look how large today's volume bar was. Okay, it's huge. It easily eclipses the previous volume bars, and it's the largest volume bar it has seen since May 19th. Okay, that's something to notice. Definitely notice. Okay, now looking at TA wise, /CL, it held the 55 EMA on the daily time frame. Okay, now look what happens. It reclaims the daily 9 and 21 EMA, and it's constantly using the 9 EMA as support right here. Okay, as long as this support holds, we're going to be looking for a blast off. We're going to be looking for a leg up off of it. Now, coincidentally, this is one of my favorite long setups, no matter the ticker. Okay, you have resistance right here, but it has reclaimed the 9 EMA. Okay, this is now where price is going to get squeezed in between very strong technical support and the 9 EMA versus very strong technical resistance, which we've seen dating back to May 5th. Okay, this is a very good setup for you to go long on any ticker that you will find. Okay, so long as the 9 EMA does not get broken and it's not closed below on the daily time frame, it is safe to go long here. Okay, because this technical support is eventually going to push the ticker up through the resistance, and then that's more than likely where you're going to get that leg off. Okay, and lo and behold, that's what ended up happening here with /CL. Okay, we broke through it 3 days ago. We had a nice close above. We tested the waters again. Okay, we tested support. We tested above the resistance. Sellers were in control on the 28th of May, but yesterday on Memorial Day, or excuse me, no, this was today, June 1st, excuse me, the energy bulls came out in full swing and they catapulted /CL well above the resistance. So now this resistance becomes new support, and we ended up getting this leg off of the 9 EMA, which is what I was expecting. But we looked at /CL. Okay, so how do we apply that into options trading? Well, that's easy. Let's look at ExxonMobil. Okay, ExxonMobil here. Beautiful, beautiful descending wedge. Okay, now I know it's going to get a little fuzzy with my price levels, but bear with me here, okay? We have a big, beautiful descending wedge right here on the daily time frame for ExxonMobil. Okay, notice what key support we were holding this whole time. We never even touched it. It was a little bit below, so it was there, but we never got an actual touchdown off of it, which was the 55 daily EMA. The strong technical support has always been there. We never closed below this, therefore I was never even close to being bearish on ExxonMobil. Now, if you look at price action, $58 ended up being the key support to hold. Okay, look at these multiple bounces, 4 days in a row. $58 was used as our technical support with, it looks like 3 bounces in a row, back to back to back. Okay, now finally, look what happens this morning. We end up gapping up and we get a very large volume bar. We now have the stochastic slow cross to the upside, showing strong momentum shift. We have the very large volume bar, which is always good. It eclipses Friday's volume bar, which is always good to see. And now OBV is also pointing up, showing bullish volume. Okay. However, another thing that I was looking at to go long here with ExxonMobil, okay, it wasn't just this descending wedge. Okay, that was beautiful in of itself, and that's a great thing to look for. But you want to find a confluence. Okay, here's the confluence that I found that made ExxonMobil such a high probability swing setup. Okay, remember, you want to look for high probability swings in your trading. Okay, this was one of them. We have a gap fill to the upside indicated by this white rectangle. Now, this gap was filled today. Okay, this was a beautiful gap up, and it filled the old gap, and so now there's a gap down to the downside that will eventually be filled, but that's for another point in time. Okay, this gap fill was from 59.84 all the way up to $60.41. Okay, ExxonMobil filled that gap within the first hour of trading. It might even have been within the first half hour of trading today. Okay, but this is the high probability setup that you must look for in your swings. Okay, find the confluences in your swings. Okay, what's the confluence here? This descending wedge, which is a bullish reversal breakout pattern, and the gap fill to the upside. Okay, gaps love to be filled. Gaps will be filled every single time, usually unless it's 6% or more. If the gap is 6% or more, then there's a chance that the gap won't be filled. But eventually, in due time, every single gap will be filled unless you get a very unique, and they are rare, a gap and go setup. And that's usually when the ticker moves or gaps up, by 6% or more. Okay, so this was a very high probability swing setup. And now, if you look at ExxonMobil, look where it gapped up today. It's now gapping up above the 9 and 21 EMA, which is my blue and purple line shown right here. So now it's above technical resistance, which was technical resistance, and now it's going to be treated as technical support. This now puts 61, 61.40, 62.57, and then $64 in play over the next couple weeks. And that's what I'm going to be looking at as well, to keep reloading on these energy names, because the energy bulls, ExxonMobil up 3.5% on the day. This is something that has a lot of wind in its back right now. Okay, there's a whole lot of upside to the oil and energy market right now too. Okay, this is not just a one and done type of play. I'm going to keep checking this on the daily, weekly, and 4-hour and hourly time frames over the next couple weeks and couple months. As the world begins to open back up again, I think you're going to see a very strong return over the next year or so. I would say 1 to 3 years, you're going to see a very strong return for the energy and specifically oil market as well. Okay, but now let's look at XLE. Okay, keep in mind all of these swings went for 50 to 100+% profit. Okay, so again, this is looking at high probability swing setups, finding the confluences in your trade, checking futures. Okay, /CL. That's if you're trading the energy market, you must check /CL. Okay, that is a ticker to watch. Also check /ES, because energy names like ExxonMobil, XLE is an ETF of SPY. Okay, there is an energy sector in the S&P 500, so obviously SPY is going to have some indication on how the energy market moves, but the energy market is unique. It's going to deal with OPEC a lot. There's going to be international news, the Middle East, any international conflict or incident that arises out of the Middle East, that is definitely going to affect the oil market and the energy market as well. So this is a very unique sector to trade. So you want to be looking at all these things to make sure that they all line up in your favor. Okay, XLE, very similar setup here to ExxonMobil. There's no descending wedge, but we do have the gap fill to the upside. Okay, so we have a gap fill from 52.95 all the way up to 53.37. Okay, we swung 53 strike calls for XLE. These were easily in the money. They closed over $1 in the money today for anybody who held. Okay, now let's look at something here as well. We have our stochastic slow across to the upside now. I'm reloaded in XLE 55 calls for June 18th expiration. Okay, so we're eyeing a recent 52-week high over here as well. And right now, I'd say there's a very good chance that we could look at that being in the money tomorrow as well. If you look here at the ask right now, is at 54.84. That puts us 16 cents away from being in the money if the market was to open right now. Okay, so the energy market, the energy bulls right now, they have the wind in their sails and they are loving this. Okay, but let's look at this from a TA standpoint as well. OBV, constant uptrend. Okay, this is different than ExxonMobil. This is different than /EL, or excuse me, /CL. My bad for that. This is constant uptrend. Okay, this is showing me that it's bullish momentum. Okay, when I see something like this, but the price action is consolidated, this tells me eventually we're going to get a breakout and we're going to get a leg up to the upside. Okay, until this point's down, like it does back over in here, I'm thinking upside. It's only a matter of time until there's a leg up to the upside and we get that blast off. Lo and behold, that came this morning on June 1st. Okay, we got our big breakout to the upside. We have our gap fill. Okay, this is another confluence, but it's a little bit different than ExxonMobil. Okay, a gap fill is one part of the confluence, but what's another part of the confluence is this range for XLE. Okay, notice this range right here. This was my stop loss for XLE too. Was the bottom of this range. Okay, if XLE was to break down and it was to fall back into this range today, my stop loss would have been the bottom of this range. Okay, we have previous support dating back to May 19th. Okay, if that previous support breaks, then I'm looking at the 55 EMA. But this bottom of this support range right here was my stop loss. But that never came to fruition. Notice the past 2 days, dating back to Thursday and Friday, May 28th and May 27th, the 21 EMA was being used as technical support. Okay, the 9 EMA still struggled as resistance, but the 21 EMA showed itself to be a valid and strong technical support level. Okay, between this technical support holding, the OBV showing a steady uptrend, showing bullish momentum, and this imminent gap fill waiting to be filled to the upside, I know XLE is primed for a breakout. Now, here's not even the best part. I can't show this on this video because it's all old information now, but I have been talking about it in the server and on StockTwits for a couple days now. There has repeatedly been a ton of call volume and open interest on these options that we swung repeatedly day after day after day. I'm thinking we were watching them for 3 to 4 days in a row, and then finally going back to last week, we were watching them finally today. They all gapped up, and they actually, a lot of them opened in the money. And that's what led to the 50 to 100% returns. Okay, so not only are we finding the confluences in our chart and our technical analysis setup, but we're also using the option chain to our advantage. Okay, when we use the option chain to our advantage like that, when we see out of the money call flow coming in on weeks away expiration, that's smart money. That's Wall Street and big money opening up positions. Okay, retail traders, they tend to stick with weekly expirations, with weekly options. But when you see out of the money options popping up with large amounts of call volume or put volume, depending which way you're trading, and there's open interest to match it, that is smart money opening positions. That is something you can always look for as a very strong piece of conviction in your trade, okay? Because when you're trading with Wall Street and you're trading with smart money, guess what? Smart money hardly ever loses. They tend not to lose because they are the market makers. Okay, so that's something else to keep in mind as well. Similarly, to ExxonMobil as well, look what happens. ExxonMobil gapped up above technical resistance. Now XLE did as well. We're now cleared for takeoff all the way up to $55, which is now my new price target for XLE as well. Okay, we were able to sell out this morning for profit for our XLE calls that opened up in the money, and then we waited until the end of the day today, and we reloaded in new positions as well. We let that juiced IV, we let that juiced option premium because of the IV pump die down a little bit. We entered within the last 5 to 10 minutes of market open, and we're sitting really, really good right now as far as the open looks heading into Wednesday morning. Okay, but what I just broke down for you in ExxonMobil and XLE, this setup is something that you can look for in any option setup that you find. Okay, I'm talking about the energy market right now, and yes, this is a unique market to trade in, but it is not held to just this market. Okay, you can use this setup in the tech sector, you can use this setup in the financial sector, you can use this setup to trade US Steel, you can use it to trade Boeing, Apple, whatever name you like it. Just wait for the confirmation, wait for the smart money to show themselves, to reveal their hand on the option chain, wait for the TA setup to come into play, because that's another piece of your conviction, and then just buy time. Okay, Wall Street knows that they're going to get retail out. Okay, do you have any idea how many retail traders FOMOed in and open today for the energy market because they saw how much it was gapping up? Okay, they FOMOed them in at open. They all bought in late. We were selling our contracts back to them this morning because we were in early. Okay, Wall Street knows this. Look for that open interest. Look for that out of the money call volume to pop up on dated options. Okay, not weekly options, but 1, 2, 3 weeks until expiration. That's what you want to look for. That's when you know it's smart money opening new positions and it's not retail. Okay, look for that in your swinging, or excuse me, in your swing trading plays, and I promise you it will be a high probability setup. And if you buy time and you manage your risk appropriately, this will be a very rewarding setup. And this is exactly how I traded XLE and ExxonMobil for 50 to 100% returns. All right, if you are new to Father Time, if you're new to my trading style, I'm going to link my Discord and my StockTwits profile in the bio down below. I would greatly appreciate it if you could like this video, if you could subscribe to the new and upcoming YouTube channel. I post a weekly watch list every week, and I'm going to be doing a lot more of these trade recaps as well. But with that being said, I hope I was able to show you something that you took I hope I was able to show you something valuable that you were able to take away from this video. I showed a little bit of how I swing trade in this video and what I was looking for in these two swings that opened up today for 50 to 100% profit for a lot of people out there. All right, take care.